In this video, I want to take you through, and there's a great lesson today that I want to talk to you about, Iron Condors, of course. So let's jump into the markets that I'm interested in. And these are the three I'm interested in: Apple, Adobe, and Walmart. And I'm going to show you why. We're going to start off with Walmart. Walmart's a great one because if we come in here to our options chain and we drop down here and we say we want to come out to, let's say, 35 days, we're avoiding that 42 days because there's no volume and open interest on there as we saw before. But the chains on this are relatively wide. We can go out a little bit further. We can go to 49 days, but I'd rather not go out that far if I don't have to. We might do this on Monday, so 49, 48, 47. So we'll be right in there on 49 days on Monday. I'm not sure we want to put this on a Friday. Not real anxious and excited to put on positions on Friday. Oh, look, there's no volume and open interest on the 49 day either. So we are stuck. We're kind of stuck here with the 35 day. So we have to do 35 days. We're going to come in here, 35 days. We're going to go into the multi-leg, and we're going to drop down here to Land's Iron Condor. And boom, look at that thing. Look how far those wings are apart. Now, at this point, you can see that if we come down to the chain, you can see that the market just has to stay inside that box. And that's, look at this. This is Corona. Look at this. This is Corona for Walmart. It didn't hardly even do anything to it. That was the movement of Corona on Walmart. All the other markets dropped like crazy, just really struggled with the coronavirus, right? Not Walmart. It kind of didn't even phase it. So it just kind of rallied, made new highs relatively quick there in April, came back down. It's just been going sideways ever since. Now we got a nice big bump here in July 7th. I think this was earnings, and it came up nicely. And it's just kind of rounded out here. Now we've broken above the blue lights once again. So this is a nice little rally saying that we're bullish on this thing. If you wanted to take a long position in in Walmart, then that might not be such a bad place to pick up a long position. I've got a long call on Walmart right here, but I've also got this really wide Iron Condor. But look at this thing. I want to show you the reason I like it for an Iron Condor is because look how big that box is. That's a huge box. Now the problem is that we come over here and look at the calculator. At this point, the way we dropped it in here, it's a $1,000 margin with a trade premium credit of $91, which gives us a 9.10% return on our investment on our risk versus reward there. So our risk of $1,000, which is the margin, and then we got our trade premium credit of $91. That's 9%. Now we can increase this by bringing these closer. So we say, well, let's make the box a little bit smaller. And if we snap that box in a little bit smaller, you can see that our credit goes up, but our return didn't go up much. So let's come in here and say, okay, if we think Walmart's not going to really do much over the next little while, and it doesn't mean we have to wait for it to go all the way to the purple line. We can take it off as time decays, come in here, and we get a percentage of our total increase. But we want to look down here at our odds. And so remember, when we do probability of in the money, that's when we're buying an option. Probability of out of the money, that's when we're selling an option. So we're going to come in here, and this is the insurance policy, so we can drop this in here, 90, 80. That's about where we want to be on this to start. Now this is our starter. We're going to put this in, this 87, 96. Let's bring that in one. Now look at where we're at here. If I move these wings out, and I'm relatively bullish on Walmart, so I don't mind bringing the wing in a little bit closer to the downside. I don't think we're going to have a big drop in Walmart. We may. It may drop, but that's the chances that we're taking, right? So that's why we have an insurance policy. Now one thing I like to do, one of my little tricks, is I like to come in here, make that box about the size I want to do, which is the 80s. And I brought it in a little bit because I'm a little bit more bullish on Walmart than I am bearish. And so I think the market's going to drift a little bit higher as we go. So I want to have that box bigger to the upside than to the downside. But that gives me more money to the downside. As you can see, it's $164 in here, receiving with the $80 interest rate, or an $80 insurance policy. So if we come in here and we drop this down, let's bring that all the way down as close as we can. You can see that brings us up to a risk on return of 26%. That's pretty darn good, but the total premium credit is only $134, but our margin requirement is only $500. I like that. That's kind of a thing I like there. That's one of these things I really like. Now we're going to go out and just go out one more click, and you can see we still got 22%. Our trade premium credit is $111 with a $500 margin. It gives us a bigger upside to the box. We could do the same thing on the downside. We could take this out if we're a little bit nervous that maybe a Walmart will fall. Now we're going to get a 12% return, which is $62 on every $500 investment. That's 12% in the next. That's 12% return on the next 35 days. So we can bring that in again. If we're a little bit more bullish on the market, we can bring that up. Now watch that insurance policy sitting out there with a $42 insurance policy. That gives us a 14% return. So that's $149 on a $1,000 margin. if we slide that insurance policy and watch what happens over here to the calculator, we go to a $500 requirement for the margin, and that's a risk on return of 22%. So that's why I like that the way that is. It gives us a bigger box to the upside, a little bit bigger box to the smaller box to the downside. But that's a nice strategy because I kind of believe, using Fibonacci projection in here, I kind of have a feeling that we're going to see this market just continue to drift higher. And I may be willing to take this thing off, and it might not even drift that higher that much, kind of more like this is what I'm kind of anticipating. Just kind of a slow drift higher here on Walmart and get a little bit of a jig and jog in there. But I think it'll stay inside that box pretty easily. And so that's one I really like. And so I like that enough that I want to put on there. This is the demo account, of course, so we got a relatively large account that we can play with, because we've built this thing up over time. But you can see that's 22% return on your risk. So we put in there a $2,500 investment. If this thing stays inside well within that box over the next, what did we say, 35 days, we're going to collect $555 on a $2,500 investment, or 22% return. I like that one. That's a really good one. And so you've seen how I've done that, the math that I've done on that one. So I'm going to go ahead and we're just going to, now remember, when we're in the real market, we want to bid for this. So we got our bid, our ask, and our midpoint, and we want to make sure we come in here and we bid for this. I place the order, say, okay, I want it at the midpoint. They're going to come in and say, you don't get it, we're not going to give it to you. Say, edit the order. And then you can come down here and you can just go incrementally down towards the bid and edit the order, and we'll just keep going down until they give it to us, right? Okay, so I'm just going to come in here, hit market order. We're going to go ahead and hit place the order, and that'll take us into the market and put us into the market in Walmart with our nice little Iron Condor. All right, so the other two that I really like, I like Adobe and I like Apple for the same things. Now, Apple's a little bit on the move, so we're going to make that, but we can have really wide condors, and we can be a little bit more bullish or bearish on this one as well. I'm going to let you do the math on those. I'm going to let you place those orders. I showed you how with Walmart. I'm not going to drag out this video any longer. You saw the ones that are working. You see the markets that I like. I like Walmart, Adobe, and Apple for Monday, and you can come in and practice and play with those and put on your Iron Condors and do the math over here with your options calculator and get the percentages, increases and decreases based on how you're moving your wings. And if you have any questions, please let me know, and we'll work through these again on Monday and see how we put these on and see how they're going. All right, guys, that's the quick and dirty of the options this time, of the Iron Condors that we're looking at, Apple, Adobe, and Walmart, adding to our positions along with the positions that we already have in our open long positions, as you can see here. So, all right, take care. We'll catch you on Monday.